Good morning, everybody. We are going to give it just another 30 seconds to a minute here before we get started. Let everybody get their cup of coffee and get settled in. All right, well, I'm going to go ahead and kick us off. Good morning, everybody. I hope you've all had an opportunity to grab a cup of coffee, settle in. We really appreciate you all joining us this morning and taking time out of your Thursday to join our June partnership meeting. My name is Eric Byington, and I am the Director of Entrepreneurship here at Denver South. And I also have the pleasure of heading up an initiative that we call Project Nexus. So some of you may have been able to join us in October last year for a partnership meeting where we kicked off kind of announcing Project Nexus. And but for those of you that are unfamiliar with the work that we're doing to really kickstart our startup ecosystem here in Denver South, we launched this initiative last year with the goal of building a connected and thriving ecosystem in Denver South that connects entrepreneurs and startup companies to resources and local assets to help them start, grow, and scale their business. Today, we're going to get to hear from three of our key partners in this work. I'm really excited to have Mike, Emily, and Charles joining us this morning. So we decided to launch this initiative for a couple of key reasons. We know that supporting an entrepreneurial endeavors is an important economic development tool, and it drives really three key outcomes. First and foremost, it's a key tool in improving and driving the workforce development in a region through attracting and retaining top talent. Second of all, we know that it drives financial growth through attracting outside investment dollars and then recirculating local investment through successful paybacks and exits. And finally, there's a key piece to this work that really helps create net new jobs in a region. So one of the things I just want to point out real quick, this is a data point that kind of reinforces that net new job creation. The Kauffman Foundation conducted a research project a few years back that looked at net new job creation across the nation with firm age as kind of the common denominator. So you see that red line that's kind of going across there. That's new firms. So organizations that are in that sort of 0 to 5 range in their development. What they found in this research was that in good economic times, new firms far outpaced older firms in creating net new jobs. But, and perhaps more importantly, what you see here is that in challenging economic times, kind of like what we were experiencing in 2009 and some of what we're maybe experiencing somewhat today, while the pace slowed down a little bit, new firms were still creating net new jobs, while more established firms, those organizations that are 6 years and older, were having to go through a period of layoff, creating a retraction in net new job creation. And this played a really big role in helping those regions that had systems rebound fast. In a decade plus since the Great Recession, the economic recovery in those regions has outpaced recovery in other regions at an exponential factor. So that's just one data point and one kind of reason that we really feel like this is an important tool for what we're doing with Project Nexus. One of the things I really want to reiterate here is that this work takes a long-term view. So we think about this in 5 and 10-year increments. You know, building a thriving and connected ecosystem is not something that happens overnight. There's key elements that have to be there to really drive what that work looks like. And as one of our partners at RVC likes to say, this is farming, not hunting. And I think that's a really good way to think about this. It's cultivating, it's planting, it's working the fields, if you will, to really work what we need to put in place to build out this ecosystem. And our vision is to create an environment and an ecosystem that enables local entrepreneurs to start and grow their businesses right here in Denver South and continue to attract and retain top talent to the region. We already have some great early stage and growing companies here. but we are really focused on seeing exponential growth in these high growth and high value companies throughout the region. I know there's a lot going on this map, but this gives you a little bit of an idea of what we mean when we talk about an ecosystem. And a healthy and active ecosystem is really dependent upon a wide variety of active and engaged actors. So while your day-to-day activities, and many of you on this call this morning, may not necessarily engage with entrepreneurs and startups on a daily basis, you and the work you represent all play a really key role in helping us build this startup community. And like I said earlier, we're really fortunate to have some growth stage companies here already, and we have some really key foundational partners and community members here that help drive this work. You'll hear from three of them this morning. But part of the work that we do through Project Nexus is really focused on identifying gaps that you see on this map and continuing to bring in other resources to the region to help support that growth. Now, I shared some of these statistics back in October, and many of you may have heard some of these statistics or seen some of these numbers, but we have a lot to celebrate here in Colorado. We have a long history of startup success, and there's been a lot of recent news about creating new organizations, funding that's coming into the region, and the relocations that we're starting to see from some tech companies and high growth companies that are moving here to Colorado. But as you'll hear more from our panelists, we can't stick our head in the sand or sit back and just rest on the success we've seen so far. We still have a lot of work to do. And if you want to keep pace with some of the other regions that are doing the important work of building out their startup ecosystem, then we've got a lot to kind of get ahead of here. So what you're going to hear today from our panelists is really going to focus on not so much some of the success, but on what we're doing to continue to really focus on where we're going, again, 5-10 years down the road. I'm really excited to have Mike Freeman, Emily Klein, and Charles Fred joining us this morning. Each of them represent a different organization that we've worked with for quite some time. And we're really privileged to not only have their leadership of them and their organizations here in Colorado, but to have such a really strong presence here in Denver South. So we're gonna go through this a little unorthodox. I'm gonna introduce each one of the speakers up front, and just because we're gonna be kind of passing the rights to share the slides back and forth, I'm not gonna interject and introduce the next one. So I'll go through and introduce each of them here in just a minute. At the end of their presentations, we will have a Q&A period. And so if you have any question throughout their presentations, please feel free to jump into the chat and put that in there. We'll be monitoring that, and we'll be leading the Q&A once Charles has wrapped it up. So with that, I'm going to introduce our speakers real quick. Starting off with Mike Freeman. Mike is going to kick off the presentations this morning. So Mike comes from an extensive public and private nonprofit sector background. He served as the chief financial officer for the city of Fort Collins, was a city manager for the city of Ashland, Oregon. He held multiple roles at the city of Thornton here in Colorado, and led several management consultant ventures over the years before joining Innosphere. And currently, Mike is a CEO and general partner at the Innosphere Ventures, Colorado's longest standing and most successful commercialization program. I'm trying to say that early in the morning. In his role, Mike oversees the operations, finances, strategy, and execution for both the nonprofit incubator program and the organization's Seed Stage Venture Capital Fund. Our next presenter will be Emily Klein. Emily works with Rockies Venture Club, where she works to connect angel investors and entrepreneurs in Colorado and beyond. She is also the director of the Women's Investor Network and managing partner of the Rockies Vintage Fund 2021. In her current role, Emily is most passionate about providing financial and educational resources to helping startups scale their impact and to see early stage investments in the most important for catalyst for promoting more sustainable, diverse, and creative companies. And then wrapping up our presentations this morning will be Charles Fred. And Charles is an entrepreneur and researcher, best known for a body of work to positively influence the success of small businesses. Over his nearly 40-year career, Charles has founded and led 3 companies into the middle market, generating over $220 million in enterprise value. In 2014, Charles and his daughter Jamie co-founded TrueSpace, a firm right here in Greenwood Village that helps entrepreneurs from the startup phase to the middle market. In February of last year, TrueSpace, in partnership with the Gallup organization, announced the release of a multi-year research effort detailing the operating conditions that must be present for small businesses to consistently reach the middle market. So with that, again, I'm very excited to have all of them joining us this morning, and I'm going to hand it over to Mike Freeman.
Thanks, Eric. I appreciate being able to participate in this panel this morning. Again, my name is Mike Freeman. I run an organization called Innosphere Ventures. Our forte is working with science and technology companies and founders, usually through about the first year to maybe a little bit further into the early stages of the company. We really do about three things at a high level. We run a commercialization program, Eric mentioned, typically supporting about 30 to 35 companies at any given time across the Front Range predominantly, and then increasingly some out-of-state startups. We do have some real estate. We focus on more specialized facilities like wet lab space. And then more recently, we've gotten into venture capital. And I want to, after the overview of Innosphere, focus in a little bit more on some venture capital challenges I think we were seeing in Colorado that would be worth discussing. So at a high level, how our process works is a company comes to us and works through an application process to be considered for the commercialization program. And then a variety of tools that we built over the years kind of kick into gear, starting with a formal assessment of where the business is at the startup phase. Once that's completed and the company is on board as a new client company, then we run through a 3-month, very intensive process of helping the company really work through the critical understanding of where the risk factors are going to be in the first couple of years of the business. Once we transition the companies out of that kind of batch education process, one of the things that Innosphere does a bit differently than I'd say other accelerators is that each company gets a mentor who's assigned to them for the balance of the program, which would usually be about a year or so. The objective of coming into Innosphere as a startup company is to leave successfully. And we define that as achieving a business milestone that would demonstrate progress from one phase of development to the next. And so when we think about what the risk factors are for startup companies, there's a lot of data out in the world that helps us understand from a high level perspective why companies are failing in the early stages. And Charles will talk later, and I'm so glad he's on this call, about the challenges companies see when they're scaling. So think of Innosphere as squarely in that startup phase. And when we look at the data, one of the best studies that we've seen comes from a group called CV Insights. And what they saw studying hundreds and hundreds of tech companies that failed was there were predominantly 4 major risk factors that have to do with the market, being able to manage cash and be successful, attracting investment, having a complete team or not, and then competition. And so we weave in these critical risk factors into that early work we do with startup companies. So one of the things in the commercialization program that we're excited about is having over the years really defined more specifically the stages of development from the start of the business, through formation, startup and launch. And our partnership with TrueSpace, for example, kicks in our model around that launch period of time. So we're very focused on what we would call formation and startup. And so I just put some of the metrics here that we would expect to see from a company at this stage. The main thing we're trying to drive into the founders' heads is you have to achieve technical product and business milestones consistently and do it rapidly for the business to be successful. So we're constantly assessing where is the company and what is the next milestone that it should achieve to be successful over time. So I'm going to switch gears and talk a little bit about the venture capital ecosystem. You saw a little bit of data from Eric here just a minute ago. Definitely Colorado is doing well in terms of venture capital. And I know there's quite a lot of data on the slide, but I think the point I want to try to get across is a couple things. One is that the amount of activity in terms of the deals and the deal value in Colorado and venture has been really rising quite nicely, really from about 2015 on. So if you look at 2020, for example, just to give you a sense how to read this. $2.7 billion of venture capital was invested in Colorado, about 377 deals. What's really interesting is that through May, middle of May, we've already seen 2.6 billion in capital flow into Colorado in 168 deals. The kind of the point I want to try to make here is that that's great, and we've been very successful attracting out-of-state capital, but this also is a double-edged sword. So as our ecosystem has grown considerably from 2015 on, what this chart shows is that the bulk of capital that's coming in to Colorado companies and funding local businesses here is not local money. And we think there's a lot of room for more local venture capital funds to come online and take a portion of this invested capital that otherwise is flowing out of state. So for example, in 2020, our data from PitchBook would estimate that about 95% of the capital that flowed in and backed Colorado companies that year was not local funding. So what are we doing at Innosphere to try to impact this phenomenon? Well, we put together a first venture capital fund that's fully deployed. Happy to say that the first company that exited out of our fund is located in Denver South, called Rhodium Incident Response Management. We've got a company in the merger process right now, several companies heading into likely acquisitions, we hope later this year, early next year. So we invested across a range of technologies, SaaS software, medical technologies, to hardware. And so, very kind of balanced portfolio for our first small fund. We're quite excited about how these businesses are doing so far. And that's led us to putting a second venture capital fund together, which will launch in about 1 to 2 weeks. It's called Innosphere Fund 2. This fund is a seed and A round fund. So the big change for us from the first fund to second fund is being able to make follow-on investments. This fund will look out over the what we're calling the Mountain Plains region. And we're focusing on this region largely because the capital gap I described a bit earlier in Colorado, meaning the significant flow of out of state funding, also occurs in virtually every state surrounding Colorado. And so this is a VC fund, seed A round, focused on the Mountain and Plains region. Last slide, one of the exciting things we've done in 2020 is expanded our university partner network out of Colorado. And we did that specifically to support our second fund in technologies related to clean technologies and medical. And we're happy to say that that was quite successful. And we've secured many new research partnerships heading into 2021. So Eric, with that, I'm going to turn it back over to you. And I appreciate the time this morning to give an overview of Innosphere.
Awesome. Thanks so much, Mike. Next up will be Emily Klein. And while she is hopping on the screen and prepping over there, I do want to just remind everybody, if you have any questions, remember to drop them in the chat. And we will be circling back with everybody here once we're done presenting. So with that, Emily, it looks like you're all set up and ready to go. So I'll hand it over to you.
Old pros at Zoom presentations. Thank you, Eric and Alex in Denver South, for having me and RVC. My name's Emily. As Eric let you know, I've been with RVC for about 2 years, managing our many events, education, workshops, and large conferences. I also run our Women's Investor Network and manage a small sidecar fund called the Rockies Vintage Fund 2021. All of this to leverage local private capital for job creation and economic development. Eric alluded to the partnership that we've grown with Denver South. We think that what Project Nexus Denver South is doing is incredible and much needed. And Mike, I appreciate you for highlighting some of the challenges of our ecosystem, as well as a lot of the opportunities. I know when we got to talking prior to this partnership meeting, we highlighted a lot about how Colorado is getting a little bit outpaced by these regions like Salt Lake City, Austin. And I think that provides a lot of opportunity with these partnerships, with ecosystem building, et cetera. So before I want to get into what I do, what we do with the Rockies Venture Club, I wanted to talk a little bit about economic development and why we're so focused on startups. I know, Eric, it's clear we do a lot of presentations together because my messaging is very similar. But the main idea here is, instead of only leveraging taxpayer dollars for economic development, really adding into that toolkit private capital from your community, giving opportunities to create that local investing ecosystem. This is the reason why I've gotten into this work on the venture capital side of things. I'm really personally passionate about democratizing access to capital on both sides of the table. So entrepreneurs being able to receive the funding and support that they need, but also investors being able to become investors, step into a role, and move a small portion of their portfolio out of Wall Street and into Main Street America. I think there are many ways to do this. Some of them are publicly accessible. Some of them are becoming more accessible through new national legislation. Some of the most common ways that you think about investing in your community is through credit unions, CDFIs. I know people get creative in the public markets with stocks and bonds that focus on community development, community investment. Crowdfunding, both equity and rewards-based crowdfunding, is becoming increasingly popular. Real estate, but what we focus on with RVC and what I see having the most outsized impact, especially in regions like Denver South, is angel investing. Angel investing, is set a little bit aside here. It's focused on the private companies, not investing in public markets, obviously, and really looking at scalable startups. We're in the business of getting these companies to grow, to be unicorns, to be, companies that are generating millions of dollars in revenue, hundreds of jobs, strategic partnerships, acquisition opportunities with our large corporations that are headquartered. I know Denver South has the highest concentration in Colorado throughout the Front Range. So focusing on these scalable startups, what I believe is, when we scale these companies that are built to have impact, whether it's community impact, social impact, sustainability oriented impact, we're focusing on scaling that impact as well as the companies. So what we're focused on here, angel investing. Eric, we're citing the same sources here. Kaufman Foundation highlights net new job growth created from startups. This is a great area to focus on for economic development. It takes an ecosystem, as we'll get into, and we've been talking about, but job creation from startups is one of the biggest tools that we can leverage here. So in our ecosystem, a very simplified, distilled version of this is thinking about the entrepreneurs, the investors, and then all the corporate partners around them. I know Eric had another similar slide to this that had a few more spokes in the hub around state support, regulatory support, et cetera. Mike talked to you a little bit about incubator, accelerator programs, as well as the funding side of things. Charles will talk a bit about co-working spaces, although TrueSpace is not really truly a co-working space. Workforce is a really big topic in Colorado right now. I just saw an article about our legislation for equal pay for equal work and all the mess around that. There's a lot of awesome people in our ecosystem focused on these top three. What RVC focuses on is these bottom two. And I want to emphasize that we focus on mentorship, advisorship, as much as we focus on the financial capital side of things. So focusing on these bottom two, I'll introduce RVC to those of you who have not connected with us yet. We are a nonprofit. We work closely with the state, closely with these other organizations to accelerate economic development within Colorado by educating and connecting investors, angel investors, and early stage entrepreneurs, really the ones that are seeking their first kind of real round of funding. We are the longest running angel investing group in the country. We've been around since 1985, so this is not a new game that we're playing. We do all of our work primarily through community-based events. We moved everything on Zoom and actually did really well with that, but we run 2 big conferences a year. We run monthly educational workshops to really lower the barriers on both sides of the table to getting into this asset class, getting into investing in startups, learning how to leverage that small portion of your capital into this. You know, angel investing forums, we have a hyper accelerator coming up next week that really works to get these companies ready for their first round of funding. And out of all of that work, we connect those companies. We see about 70 pitch through monthly events with our network of about 200 angel investors. And we invest in 20 to 30 each year. I will say on top of this kind of what we call contact sport active angel investing, we basically create the legal and financial structure to allow accredited investors to invest in these securities. We also run 2 venture funds that represents, like what Mike is doing, the more passive LP oriented side of things. So if you're not into the contact sport, we also have the opportunity to, you know, invest passively, have your money actively managed by those fund managers, and enjoy the diversification of this deal flow that we get. One other thing that I want to, well, before that, I will just highlight quickly within our investment process. I won't go through all of this, but the 2 main keys here is we have the education, and then we also provide the legal structure. We go through a single purpose LLC, which makes it a little bit easier to manage these investments on the investor side as well as the entrepreneur side. And then we also syndicate here, which I'm going to get into in a little bit more detail, but Mike also hit on, you know, bringing out of state capital and kind of the double-edged sword of that opportunity for Colorado. In addition to all of these, we've started in the last maybe 2 years focusing in with the State Office of Economic Development on a couple of advanced industry angel investor subgroups. We're technically industry agnostic, meaning that we see companies of all different types that fit within this venture model, but have been paying particular attention to clean tech and life sciences as kind of subgroups, looking to leverage the corporate venture capital ecosystem, the university tech transfer ecosystem, et cetera, state support to invest in these, you know, tech-oriented companies that we think will really set Colorado apart in the next 5-10 years. One last plug, I mentioned at the beginning, I manage our Women's Investor Network. We've had great support from Denver South. Margie, I think I saw you out on this webinar around increasing diversity in our angel investing community. I think one opportunity is just the capital here, to bring capital into local ecosystems. Another opportunity with angel investing writ large is to change the landscape of what VC looks like. This is another thing I'm very passionate about. Eric, if you want me to give another webinar on this, I'd be happy to be reinvited back. But I think getting more startups invested in, but also a greater diversity of people doing the investing in our local communities will only reflect, you know, more strongly on our Colorado ecosystem. All right, a couple more quick slides. We want to highlight this is not Shark Tank. We take the approach that our Colorado startup ecosystem takes, that give first mentality, that collaborative mentality. We work on both sides of the table, bringing those people together. You know, that being said, this is in some ways, you know, very neighborly, community oriented. This is not something sharky that, you know, we're trying to take advantage of entrepreneurs, or entrepreneurs are trying to take advantage of capital, et cetera. We think that angel investing groups are one of the best ways to strengthen this ecosystem, particularly with Project Nexus in Denver South, just given how much traction has already come about from angel groups. Like I said, we've been around since 1985. Angel investing and what it means to be an accredited investor is only opening up by the SEC, by national laws. So these numbers are going to continue to grow. There are 400 angel groups, 350,000 plus active angel investors, $24 billion is invested annually by angel investors. And they back some of the biggest startups, Uber, Lyft, our Silicon Valley giants, as well as some of our Colorado giants are backed by angel investors who really help them overcome that first critical round of funding to get to scalability. We'll talk just a very, very brief amount of time about syndicates. Okay, sorry, I see pop-ups coming up on my screen. Really briefly about syndicates, within RVC, oftentimes we'll take this lead role. We're supporting the startup, we're helping them form connections, and we'll bring in capital from a lot of these other funds you see on the West Coast, on the East Coast, some more others in the Midwest. We think that that's really a big key for Colorado economic development. We like being able to lead these deals, filling out 50% of how much money they need to raise, and then helping bring in funds from other companies to support that round. That being said, the ability for us, A, to write larger check sizes, and B, to continue to invest in companies as they get larger is, I think, very important for the Colorado ecosystem. I'll skip over this one. I think this is helpful just to get the landscape. Angels, individual angels lie kind of in this, between this friends, family, bootstrapping raise and kind of the first real money a startup will raise. Angel groups, and we're seeing an increasing trend towards later stage for angel groups, will come in the first pre-seed round, the first seed round, and then oftentimes have the opportunity to follow on with these companies in small amounts through their later investment series, through to exit. I know we talk a lot about exit as well as an important, opportunity for these companies to scale in place, to leverage corporate partners, et cetera. But again, that's another conversation, and I'm sure I'm about over my time. So suffice it to say, angels can fill a large range within this financing life cycle of a startup and really play that crucial role in getting from idea pre-seed to a space where venture funds are able and willing to invest their institutional money. One quick example here, and we can go into this in more detail in Q&A, but one of our current, success stories or excitement stories, PharmaJet. This is a Colorado-grown company. They're valued at over $120 million now. They are a woman-led company, really creating impact nationally and internationally with their needle-free injection system. This is a great example of, the tech transfer and life sciences expertise that Colorado has. Great example of bringing outside capital into Colorado and helping a Colorado company really scale in place as opposed to feeling like they need to move. And is one that RVC has led, pretty much throughout their financing life cycle, despite, them outgrowing our size in many ways. We have a great relationship with Heather. We are always very excited to see their progress. Seeing more and more of these success stories, be it scaling, be it exits, which is really what we're looking to in the next year or two, be it scaling innovative and impactful companies. I think there's a lot on the horizon here for angel investing specifically. Like Eric had mentioned, Peter, all of us at RVC really like to say this work of bringing in new angel investors, creating this ecosystem of capital in the early stage is farming, not hunting. It really is a long-term vision. It is an ecosystem-driven vision. And we really want to get more people behind this. We believe that the more angel investors we have a lot more angel investors than the 220 that are a part of our group now. Giving them this opportunity to get involved in startups, to invest their capital in things that matter to them, we believe is vitally important. So with that, Eric, I'll give that back to you. I'm excited to chat with anybody later, especially around this topic of angel investing, but thank you again for having me.
Awesome. Thanks so much, Emily. We're going to have to start attributing the farming, not hunting quote to Peter more often, because it's starting to show up in a lot of different places. Again, I see some chat starting to come in from Neil and Les. Thanks for dropping your chats in there. Once Charles is done, we'll jump back in with all three of the panelists to have a conversation about some of this, but I'll hand it over to you, Charles. Take it away.
Thank you. Thanks, Mike. Thanks, Emily. I'm grateful actually just to get to follow up on both presentations. When we think about startups, we have to think about what do we do when startups become successful. When they actually make it through the startup phase, there's an entire phase of their business that they're not prepared for. At TrueSpace, the name of TrueSpace comes from this space between a startup and the middle markets. We call the early middle markets about 10 million. So what we're really doing is helping these businesses that we just got done talking about move from starting to building. We purposely use the term building, not scale, and I'll explain that as I go through, because through our research, at the end of the day, scale is the most misunderstood term when it comes to business building that we can find. So what are we focusing on at TrueSpace? In the United States today, using our research partners at Gallup, we've identified there's 2.1 million US firms that exist after the startup yet to be middle markets. So on average, these companies are around 1.87 million in revenues. Their job creation potential, assuming we could get them from 1.87 million to 10, there's 17 million jobs in there. It is the best job creation potential of all businesses operated across the country today. However, they lack capital and know how to reach the middle markets. Most of the businesses that I will refer to today that make it through the startup get stuck. So we have one other big problem that we're focusing on as well. And of the 2.1 million entrepreneurs, only 20% are women-owned businesses, and only 2% are Black owners, Black owners of businesses. So we have to change the equation of what's driving startups to this position. But we also have to help these businesses, of course, continue to build and grow. So the important part for my message to you today is that of the 2.1 million, a high percentage of them are what we call lifestyle companies, terrific businesses with great people, but they're not great job creators. However, 378,000 of those businesses are significant job creators, or at least they have the potential for it. At TrueSpace, that's what we're focusing on, is this body of entrepreneurs that have the ambition to reach the middle markets, to get to at least 10 million and ultimately to become job creators. So what I want to do now is shift real quickly to what is it we do at TrueSpace. I'm standing in our development center that we built here at the Tech Center. It is a place where we actually help businesses that are through the startup go from starting a business to building one. And the essence of our work started in 2013, 2014 on a multi-year study of which we in our family office with my daughter Jamie and myself have invested heavily to discover why more businesses that are in that 2.1 million range, or at least of that body of employees, aren't making it there. We didn't plan on COVID, like most of you that were there. We announced this research on the stage at Gallup in their development center on February 20th of 2020. When Gallup works with you, they make you defend the research to three bodies: academia, the media, and the public. And we stood on the stage and we announced the most accurate research that Gallup has formed around workplace and job creation since 2008. New York Times picked it up. We were ready to go to market. And of course, COVID hit. So we've been doing a ground game since then, mostly through Zoom. And what I'm going to show you in the next few minutes is why did we do this research, but really what did we find within it? Discoveries. Imagine for a minute studying 150 companies, literally living with 150 businesses that are between the startup and the middle market, which is TrueSpace, and giving them $50,000 of investment in return for that full transparency for 48 months of operation. That's what we did. That's what Jamie and I and our team did starting in October of 2014 through November of 2018. And what we discovered is really the breakthrough. We used two forms of research to do this. Form number one is called ethnography. We didn't want to just observe these businesses. We really wanted to study the businesses with scientific, qualitative forms. Number one is ethnography. For those of you that have an anthropology background, that's really the study of basically culture, social systems, and others. Ethnography gave us the science to compartmentalize what we saw. Probably the person that made ethnography the most famous was Stephen Jobs at Palo Alto Research Center, which is where we studied this. It was the use of the mouse that we use today was born out of this process. But we also wanted to take ethnography to another level and be able to see the dynamics within a business. Luckily, my work early on in my career intersected me with Dr. Jay Forrester at MIT, and we were able to see 12 closed loop systems inside of a business over a 48-month period that actually showed growth. Of the 150 companies, 3 went out of business in the 4 years that we worked. 14 actually grew past 10 million, that all started at 1.87 million, and 133 barely grew. What we were able to discover with our qualitative work is the difference between those that grew and those that didn't. And that's what we were able to take to our research partners at Gallup. There's a really important language that I'm going to go through today, and it's called stocks and flows. And it's the way we discover basically the ability to qualitatively look at your business and measure it, and to do it in a psychometric way with Gallup's help. A stock is this cup of coffee. It actually holds something of value. A flow into it is dynamically something coming in. I'm the control mechanism that I can see inside of a business. And if I want a half a cup of coffee, I can stop at a half a cup. An open loop system, which is what most of the 133 businesses had, is literally where the coffee or the flow just completely flows through. There's no control mechanism and there's no learning in it. So what did we discover? 12 closed loop systems, 30 variables that change the value of those closed loop systems, and 5 operating conditions that have to be created to basically get to the middle market. And the most important thing that we did here is we asked this question, and it's Socratic questions throughout. Is the business actually capable of growing? It's the question for some reason that often just gets left behind. Can you grow is a question that has to be asked before can you scale? And that's what I want to take you through here in just the next couple minutes. What did we get out of the study with Gallup is we got validation and basically a predictive model. Their threshold for accuracy of the model that we now wanted to basically put into a quantitative form was 0.70. Our instrument that they've built is 0.876. It's one of the most accurate psychometric instruments we have. Psychometrics means I'm gathering this information from you as the CEO in your small business and probably three to five of your executive team. And I'm doing this in a self-reported way, reporting it accurately through statistics. The 5 operating conditions, alignment, discipline, predictability, endurance, and value creation, allow us now to put this into a category of which we can see what's happening dynamically in your business and what we can do about it. I capture 31 data elements around alignment under this auspice of growth capability, which I'll show you in a second. Scale, 20 items around discipline, 24 around predictability, 13 on endurance, 9 in value creation, 97 in total. That's what gives us the ability to have a predictive model. So when Jamie and I finished this work, we came back and said, what have we actually uncovered? We knew qualitatively what we'd uncovered with closed loops. What do we now have on a quantitative basis? On a scoring system that Gallup built for us, I can score your system in a nonlinear form between 1 and 100. If you have a score of 53 or higher, you have a 3 times greater chance predictably of growing next year or the next 3 years. We also know that the scores that we have are not related to a company's age. You could be a 30-year-old company and a 3-year-old company and have the same capability of growing. And the scores are unaffected by gender, race, or previous education. We wanted a blind assessment that didn't look at me, where I went to school, the region I'm living in, but instead at the capability of my business to reach the middle market. And that's what we were basically able to go through. This is a little bit of our platform of what we've put together here. The idea here is that I can score it with a psychometric instrument, your business, through the 97 data elements and give you basically a stage of your growth. What you're seeing on this slide is a 54 is actually a remodeling stage. It means that you now have the potential to scale. 1 to 53, if you score 1 to 53, represents 82% of our total model. And in that case, you're still in what we call emerging. So think about the 2,500 companies that we put through this model at Gallup. We put 2,500 companies through the model using their research. 82% are still emerging, but 18% are those ones that have the capability of growing. We can identify that quickly. The nice part about this is now I can break the instrument down from alignment, discipline, and predictability. And I can do that and start looking at the details of the company and what they're actually creating relative to the capability of reaching the middle market. I can continue to look at this in now a data visualization form. The work people do here at TrueSpace is a bit remarkable, and that is, for the first time, you get to see your business in a shape around 12 closed loop dynamic systems. The purple color here is the shape of the business relative to what their capability is on the 12 closed loops. The outside band is a benchmark that Gallup built for us. There's 120 companies in the band. 4 years ago, they were between 1 and 10 million. Today, they're at 32 million. They represent a benchmark. And what you see in between is the delta of what we need to do with this company to expand it to get to the benchmark. As we expand, predictably, the score and the purple shape, the company expands also in growth and in job creation. And that's ultimately what we're trying to do here. We can dive deeper. We can start looking at the executive team and their alignment across the 5 conditions in the same scoring system. And last but not least is I can drive it down all the way to the 30 flows. The work we do at TrueSpace is to take your unique scoring system, meet you where you are, and build a playbook to actually get you there today. We have 52 members at TrueSpace. We add 5 new members per month, and this is basically the offense that we're playing with them. What I wanted to do is just take 2 minutes and show you a company that's building a business right in our central region here. It is a business called Visible Network Labs. It basically has been a member with us since 2020. Dr. Danielle Varda is the CEO. She's in the remodeling stage. She's at 57. And what she's really doing is helping people like the person you see in this picture formulate a social network that's not visible normally of how she can recover post-surgery or long-term treatment. As an example, compared with socially integrated women, socially isolated women with breast cancer have a much higher risk for recurrence, of dying from breast cancer, and a 70% higher risk of dying from any cause, not just related to cancer. However, what they're doing is actually using a technology to show the social network that actually exists for this person to get help. It's called Partner Me. It's a person-centered network tool. And the way it works, by the way, she built this entire technology here in Colorado with this team, which I'm going to show you in a second. But it connects basically what you think your network is in your close network of friends and family to the network that's required for actually recovery, especially in cancer-related illness. It basically maps that to the locations where you can find help you didn't know they even existed before you actually went through cancer treatment. And what's fascinating to me is just the way the network actually grows. Over time, the network gets stronger, and this is basically the technology that they've developed that's now becoming somewhat predominant. They're growing quickly. This is a team. If you want to see a team built right here in the Denver Tech Center or around the Denver Tech Center, Danielle's up in the left-hand corner. You get to see what a woman-built business looks like in both diversity and in prowess. These are just remarkable individuals. She's doubled the size of her team since she's been working with us here at TrueSpace. And the other part is that I think they're going to double in revenues this year as well. Another great success story, another reason for us to do what we do. Last but not least is that we exist to increase the confidence of the people that are working at TrueSpace to continue to grow toward the middle market. These are the entrepreneurs that aspire job creation, growth. So the outcome for us is exactly the same as the outcome for Project Nexus, also with Mike and Emily. So thank you for giving me a little bit of time today.
Awesome. Well, thanks so much, Charles and Emily and Mike. I'm going to ask you all to hop back on with your video and unmute yourself. And while you're hopping in, Mike, I'm going to just hand you the first question here that came in from Neil. And I don't know if you had a chance to look at that, but just for everybody real quick, Neil was asking for Innosphere, where does your industrial expertise come from to understand if company milestones, growth, technology and advancements, et cetera, are meaningful?
So I would say it's not necessarily industrial experience, it's just raw experience. Most of the folks on our team that work with companies have 20, 25 years experience building their own companies. And we've been this, in the business of working with startups for 23 years. We're constantly adjusting, I would say, slightly the model, but it really comes from working with, hundreds and hundreds of companies over the years and having a real feel for the business and product milestones that are needed to keep moving forward in the model I showed you.
Great. Great. Well, any other questions, please feel free to drop them into the Q&A. There's a topic I want to touch on that the four of us were discussing last week. And each of you alluded to this. We've kind of dropped pieces of this throughout all the different presentations, but each one of you mentioned to me last week that, the applications that you're seeing coming in for your different programs, we're seeing a lot of that come from out of state. We've talked a lot about kind of the inflow of companies, capital, resources that are coming from out of state. We joke and have said for a long time, it's not always hard to attract companies to Colorado, and the way of life here is pretty easy. The mountains are nice, the weather's always good. So, we've got kind of an easy pitch in terms of come here to bring your business. But talk to us a little bit about why do we need to be focusing on this farming, not hunting? Why are, if we're thinking about long-term, we're having some great success now, but why do we need to be proactive and not get stuck in the sand and be left behind by some other regions? I'm going to ask Charles to answer that first, and then we'll kind of go around and have everybody else chime in on this.
Yeah, I think if we really have a mission for job growth, and I'm not talking about, I'm really talking about job growth where you can build a life and a career, not just pass through Colorado. The companies that Mike and Emily are helping today have that potential. Emily, in your pitch, you had something that was really profound, and that is scalable startups. These are not just ideas. These actually have the capability of job creation. And if we can anchor them here, we'll start seeing growth that we couldn't even fathom before, especially around the tech side of this. We work in 5 different business models. So like Emily, we're kind of agnostic, but the businesses that are growing the quickest today are the ones that are drawing in talent from around the country. But you have to have the source. You have to have the source. And most importantly, from my perspective, the entrepreneur has to have the confidence to make those decisions around hiring. And that's where the entire ecosystem of Project Nexus is so vital for this. Everybody that's on the call today has to play a role in this. We have to get actively involved in drawing basically the locus back to the center, which is the Front Range potentially of Colorado right now. That said, we see a lot of farmers that are saying, let's pick up and possibly move. We have to give them a reason to do so. So anyway, I think the farming metaphor is perfect, because hunting is great, but we got to anchor things and we got to grow things and harvest things here.
Great. Mike, do you want to add on to that?
No, that was really great, Charles. I think just 2 quick items that are on my mind. Literally every day, including this morning, we're hearing about companies that are more established that are moving either a second headquarters to Colorado, or even the primary headquarters in some case. That's phenomenal. When you drill into the data around job creation, the area that I'm pretty concerned about still, and it gets back to Charles's comment, is we're not growing our own companies locally at a pace. And so if you look at a metric that we study pretty closely that Milken Institute puts out, what's called tech GDP. And so they're looking at how many jobs and what the economy is doing around technology jobs in particular. Colorado, frankly, has lagged. And we've been second quartile, even third quartile at times to other metropolitan areas in organic job creation. So we're getting really good at recruiting, which is definitely part of an overall economic strategy, but it really doesn't get to the point Charles made of growing our own in place and helping those companies grow in the region. So I think that's just another layer to consider and think about as we move forward, and how do we, frankly, collectively really encourage the entrepreneurs that are building companies locally to be successful.
Yeah, no, that's great. It really gets back to, it's not always hard for us to recruit to the region, but some of the hard work is how do we get ahead of these things? Emily, anything else you want to add into the conversation here?
I'll very much reflect those. I think we're at such a crazy inflection point with teams becoming increasingly more distributed, pushes towards social equity and so forth. And all of those should point to Colorado as really being a leader here. I know, in our work, even within the realm of angel investing, as we've become a larger angel investing group, as we become more sophisticated in how we manage these investments, capital is getting more and more pushed upstream. We're, like you had mentioned, Eric, we're seeing more and more companies from out of state, and we're requiring more and more companies to have traction in terms of revenues. And we're getting more towards this VC side of the spectrum than we are true angel investors. And it's a really interesting phenomenon. PitchBook just put out a report on US valuations, and basically why they've just completely skyrocketed. It has to do with influx of capital, low interest rates, rise of SPACs, et cetera. There's still this gap at that really early stage. And, to get people, to hand people off to the Charleses and True Spaces, to hand people off to establishing an office in the tech center, they need to go from that 3-person, MVP to that growth. So I don't know if there's anything concrete there, but definitely opportunity for Colorado to set ourselves apart, both in terms of the industries that we grow, where I am so excited this year about clean tech and the work that RVC is looking to do in capitalizing those companies that are often outside of the model that we're used to. I think Colorado could be a leader in that, be a leader in social equity. Colorado is always one of the best places for women entrepreneurs to start businesses. So continuing to develop the infrastructure around that to put us on the map.
Well, and I think, Emily, what you're touching on, and I hope everybody, has this takeaway from the presentation this morning, is that, to your point, the need to from going from those early stages, the idea of something on the back of a napkin to, moving all the way to, Charles, where you all step in and continue to help them grow and focus on the things necessary to help that happen. I think what's so unique and what I've always sort of held out there as a key piece of why Project Nexus is doing what we're doing is that I don't know many places, there's a lot of regions throughout the country that are focusing on this work. I don't know many regions that have all of the resources that we do here in Colorado, that have the leadership of what you all are doing. And so the fact that we have so many of these tools and assets in place, I think just means that we've got some great resources to draw from. It's just a matter of continuing to really do the work and take that long-term view of how this is going to continue to play out. But I'm just, I think we're really fortunate, and I'm really fortunate to get to work with each of you, but love having your leadership in the work that you all are doing here to push that forward. In the sake of time, I am going to move on. We're cutting into 8 o'clock here. I know it's unfortunate because I think we could have a long discussion about some of this stuff. So somewhere down the line, we'll have to do this again, and maybe not necessarily a partnership meeting. We've got some events coming up, and we'll plug this in. But I do want to thank each of you so much for joining us this morning, for your presentations and taking some of these questions. We look forward to having you back for a presentation again soon. And again, thank you so much for everything you're doing for our startup ecosystem here.
Thanks for putting this together. Yeah, I really appreciate it. Good job. It's fun working with you, Emily and Mike, again. Well,
absolutely. Good to see you, Charles. Good to see Emily.
Get physically together and have a glass of wine or something someday, right?
I know, I'm excited to get back into the True Space.
Yes.
Good to see you.
The development center. Yeah, exactly. Okay.
So just to wrap up real quick for everybody else, again, thank you for joining. I do want to just say there's a couple ways to get involved, and there's some work to be done, as you've heard today. So I just want to bring this slide back up again. A lot of times people think of themselves as, well, I don't work in the startup space. Or there was a question in the chat about, I don't know what angel investing is, so how do I get involved? It doesn't matter what you're a part of, as you, I hope, again, heard this morning. This ecosystem is big. It requires everybody to be engaged. And so we're constantly looking for people to get involved with what we're doing with Project Nexus. If you are on this list or on this map here, there's something for you to do, and we'd love to work with you on that. We're gonna make this really simple. You can go to our website, denver-south.com/Project Nexus. There's a couple of different ways to sign up for some upcoming events, to put your name and organization into a form there, or you can email me directly, eric@denver-south.com. We'd love to hear from you, and we'd love to get you engaged with some of the work we're doing here with Project Nexus and plug you into what we have going on with Innosphere, RBC, and TrueSpace as well. And finally, I did want to just announce we have a great event. This is an example of another kind of group that we've brought into the area. Riot is a nationwide program. They're primarily based kind of in the Southeast region down in Raleigh, North Carolina, but they're expanding out to a couple of other regions down there. They're launching their first primary event here in Colorado at the Dome at AMG Bank next month on July 21st. So mark your calendars. There should be a link popping into the chat for the event. So if you're interested, go click on that link and sign up for the event. We'd love to see you there. This is going to be a hybrid event, so it'll be broadcast out nationally, but we will also be hosting people at AMG, and we'll have some food and drink and be in person again, which will be fun and interesting. And then finally, I just wanted to note our next partnership meeting will be in August. Keep your eyes out for details. We are still nailing down the date and working through what will hopefully be a hybrid model as well. We will, sorry, I'm seeing something pop up here. We will send the slides out to people that would like them. But keep your eyes out for the August partnership meeting. Like I said, a hybrid event, and we're still working out some of the details there. With that, sorry, one more time, I got a question coming in. The email for me is Eric, ERIC, @denver-south.com. Would love to hear from anybody. Thanks again for joining us this morning. We really appreciate you all taking that time out of your morning to hop on. Look forward to seeing you at some upcoming events and getting back out there in person. Have a great Thursday, and we'll see you all soon. Take care.